Welcome to FT Live, the FT's small business clinic. I am Claer Barrett, the FT's personal finance editor. Now, firstly, an apology. We were doing a live Q&A earlier on. We heard from lots of FT readers who are running small businesses, telling us about some of the challenges and issues they're facing at this very testing time. And we also had some testing times with the FT's IT equipment. So we've got all of your questions. Don't worry, we managed to capture those. But we're going to re-record this video with some of the all-important answers. Now, today I'm joined by Andy Chamberlain, who is the Director of Policy of IPSE, which is a lobby group for small businesses and freelancers. And he has very generously given his time again to go through some of the answers that we came up with your questions on the video. Now, I am going to start, Andy, with a survey which came out last week, which found that 1 in 5 small businesses wanted to take out a CBIL. This is the Coronavirus Business Interruption Loan Scheme, but fewer than 1% have so far been able to do so. Now, we'll cover the reasons why small businesses are having problems in the course of this short video, but that small minority of people who have actually been able to access the state-backed cash, does that tally with the views of IPSE members who've been contacting you so far?
Yes. So, hi, Claire. The main thing I want to say on this is that a lot of people are contacting us and saying, well, I'm not sure if I want to take out a loan in the first place because I'd have to repay that. In order to repay it, my business would have to return to profitability. And there's no light at the end of the tunnel at the moment. We don't know exactly when this crisis is going to end. So businesses are nervous about taking out a loan, even on agreeable terms. But having said that, some people, yes, they have sought the loans, they have tried to take them out, and they have run into problems. And the experience that we're hearing from IPSE members is being reported pretty accurately in the media. Their banks won't lend it to them, they won't lend them the amounts that they need. They have been asked to do things which they can't do in order to apply for them. And there is this problem about businesses who weren't making profit. They're basically excluded from the loan scheme.
Well, absolutely. And we had FT reader Jason, who sent us a very detailed email over the weekend. If you want to email me or the Money team about your experiences, our email address, by the way, is money@ft.com. We do read all of your messages. We don't have time to reply to all of them, but the stuff that you're sending us through is absolutely invaluable as we report on this story. Now, Jason says, banks are only lending to their existing business customers. So the government advice for businesses to approach other lenders if their bank turns them down is not a reality. Now, he has actively been trying to apply for a CBIL, a coronavirus business interruption loan, for the last week. And his experience, he says, has been dreadful for the following reasons, because the government's term viable business to describe who should receive funding is being interpreted by bank lenders as limiting lending to businesses that make a profit. Now, Jason runs a startup. It's a successful startup, but like most startups, it hasn't yet turned a profit. It's in the second year of trading. So he's been told, no, you can't have a loan. He has now gone to other high street banks to be told that they're either currently not taking on new business account customers, or they have a crazy turnaround time, he says, of 8 weeks or longer. The handful of specialists who will lend to startups are just being overwhelmed by demand. And he's not the only FT reader, I have to say, to send in a similar message. Andy at IPSE, your response to that, please.
Yes, so we've heard this problem too. If you can't get the loan from your existing bank, then you're going to have practical problems in getting it from elsewhere. There's nothing in theory to stop you from doing that, but there are problems because you'll have to jump through even more hoops if the bank doesn't know you. And as we've just heard, there's a delay now for setting up business bank accounts from banks right now. Basically, banks don't want to take on new customers. So that is a problem. There is also this problem about the any business which the phrase I've heard them use is any business which was undertaking a difficulty as of the 31st of December 2019 means that you probably won't be able to get a CBIL, and if you're not making a profit, then that's going to be you. Then you try and go to somewhere else. But what I would say is, go on the gov.uk website and there are 40 accredited lenders. There's a link to each of them. So have a look through the list of lenders. There are some startups coming into this space now, and there's some indication that you may be more successful there. But Don't take my word for it. Go and check it out. It's possible there might be other avenues for you to borrow.
And other readers on the live chat were telling us that their banks weren't prepared to offer them a business interruption loan, but they were prepared to extend the terms of their overdraft. But of course, on the overdraft, you'll be charged commercial rates of interest. And on the government's loan scheme, the chief advantage of that is that they've promised that no interest will be charged for the first year. But nevertheless, FT.com reader Rosie the Riveter, like your profile name, Rosie, she says, I feel the lack of transparency about the interest rates that will apply at the end of the 1 year period is a barrier for me applying. The first provider I looked at said on its website that interest rates were subject to individual negotiation. How can this be allowed? And she also goes on to say that there's no knowledge available about the soft criteria a lender will use for deciding on whether to grant a loan or not. And I have to say, Rosie, we've had some similar comments over email over the weekend about the nonsensical ways of writing a business plan, which the banks are insisting on if you apply for a loan. But I mean, how can you base a business plan on anything at the moment when there is so much uncertainty? So, and Andy at IPSE, what is your advice for Rosie, please?
Yeah, I mean, I've heard exactly the same thing. So first year it's 0% interest, right? That's how that's a guaranteed part of the civil structure. But after that, it's completely unclear what happens. And I've heard stories of 30%. You know, I don't know whether this is true. I haven't seen it in writing, but I think that it's certainly a worrying thing. And I think this is what's feeding into a lot of IPSE members. Most people who have contacted us about the loans have actually said they don't want one, because they're worried about taking on that risk. You know, taking on a big loan right now when you don't know what's going to happen with your business, that people are understandably very, very cautious about that, which leads us perhaps on to discussing some of the other things, because there is other help available for some businesses and some self-employed people, but not for all of them.
Yes, well, let's go on to that now. Now, these are the income the government grant funding that are available to individuals. Now, many small businesses are turning to loans and their banks because they found that they don't qualify for income protection, or if they do qualify, they don't really stand to receive very much. Just give us your brief rundown of the issues here, please.
So there's two schemes. There's the Self-Employed Income Support Scheme, or SAYS, and that's for self-employed sole traders. It's quite generous for those that it applies to, but there's three groups of people who might think that it should apply to them, but it doesn't. They are people who have only been self-employed for 12 months or less. Then you're not, because you didn't do a tax return for the relevant tax year, which is 18-19, you're not included. It means you get nothing from it. If you earn over £50,000 a year, or you did in previous tax years, you're not included. You get nothing. There's no taper. It's just you get nothing. And if you're a limited company director, you also get nothing. Well, you get nothing from the SAYS. You can apply for the other big scheme. The other big scheme is the job retention scheme. This is the one for the employees where you can furlough staff and they will receive 80% of their salary, up to a cap of 2,500 a month, from the government via their employer. A limited company director can furlough themselves, but the 80% calculation only applies to their salary, not their dividend income. And the dividend income for a lot of limited company directors makes up the lion's share of how they pay themselves. Therefore, the way that it works for them is you get 80% of not very much.
Absolutely. Now, we've had a really good comment from FT.com reader Ardent Ramona, who says, dividends are counted as taxable income if you're doing a universal credit application, which certainly we know lots of limited company directors are now looking into. And funnily enough, they count as taxable income on self-assessment forms. But for the government self-employed income support scheme, they do not appear to account for as income. Now, Andy, this is a really, really big criticism of the scheme. I've written 2 columns about this now. There is a lot of lobbying going on at an individual level from IPSE, from the Small Business Federation, from trade industries like Bectu, from the Institute of Directors. Are the Treasury ever going to listen to the plight of small company directors, people who are running companies, employing other people, who are nevertheless being excluded from this life-saving help?
Well, we're flagging this issue too because it's key. So this is one group that really do seem to have missed out on all of the main grant schemes which have been made available. I have had several conversations with the Treasury about this. I have impressed on them the need to do something for limited company directors, because they're seeing if they do employ staff, they get to furlough the staff get 80% of their salary. But the directors are saying to me, if I don't get anything, then by the time this crisis ends, those furloughed staff won't have a business to return to. The employer, me, will be gone. So what is the government going to do now? I don't think that the Treasury at the moment is minded to change either the terms of the schemes or put in anything new in place. However, I do believe that they are looking at it. They are aware of the issue. The problem is something going to change? We're going to keep the pressure up, that's for sure, because something must be done. If you can't include the dividend income, and in response to that initial sort of observation that dividends are included in these other government schemes, such as universal credit, the government say that they're concerned that they can't distinguish between dividends which come from someone's own company profits, which they might be minded to include in a calculation, or dividends which come from a share portfolio. That's the main barrier, they say, to including dividend income. Now, what we're saying is, how big a population is that? How many limited company directors actually have dividends from share portfolios? I genuinely don't know the answer. We're going to try and find that out and do some research on that. But if it's not too big a problem, couldn't it be the government could offer the money and then claw back any funds which have been given out inappropriately? I would have thought that might be possible. But at the moment, I don't want to get anyone's hopes up, because the Treasury don't seem to be moving on this issue.
No, they certainly do not. And I think the other thing to mention about the dividend income problem is the assumption that people are benefiting hugely in terms of the income tax that they have paid through having this structure of company ownership. Now, lots of readers have been pointing out to us, we have to be incorporated as a limited company in order to protect ourselves, because of the nature of our trading. If you're, a plumber, electrician, a builder, somebody, even an accountancy firm, a lawyer, a financial advisor, who could be sued further down the line, you need to incorporate, and that is not being done for tax reasons. And also lots of other people contacting us saying, there really is no tax advantage once you've paid the accountancy fees. The big rise in the dividend tax a couple of years ago really means that there is no great tax bonanza for being a limited company director. I mean, Andy, what's your view on this? Because this really does seem to be colouring the popular opinion on whether directors should receive support.
Well, I agree with everything that you've just said. So dividend tax was introduced by George Osborne, I think, and then it's been put up a couple of times since then. So now there really isn't that much of a tax advantage at all to drawing money out of dividends. The reason why people draw money out of dividends is because they don't know how much money their business is going to make. So it's a very sensible thing to do. You basically, have I got surplus profit or just profit? Yes, I do. I can afford to pay myself a dividend of X amount. That's a very sensible. Your accountant will tell you to do this. Now, the government, as far as I'm aware, have never put out a statement saying people should not do this. This is not how people should remunerate themselves. Well, if they do harbour a sort of ill will or ill feeling towards people who are doing that, and that's what's behind this perhaps incalcitrance in trying to come up with a scheme to help those with dividends, then that's clearly wrong, because they've never stated anywhere that people shouldn't do that. I actually am minded to say I don't think that is the problem right here. I think the problem is that there is this reluctance to take on the dividend calculation, because one, it makes life a bit more complicated inside these schemes. The schemes work, and bear in mind they've got to be rolled out quite quickly. So it's more complicated for the government to include dividend income in that. And then there's this problem of where have the dividends come from? The government they can't tell where the dividends have come from, which, that seems to be a problem for them. As I say, why not pay everyone and then claw it back later? Is that not a possibility? Because something must be done. If we can't do that, is there some grant scheme that we can do? Can we do something generous with the tax system to enable people who have set aside money for tax to pay next January to dip into that pot, knowing that they won't have to pay the money later? Something, I think the government must do something on it.
Well, I think you could be on something with your last comment about tax. We've certainly been contacted with lots of FT money readers over the weekend who've said they don't qualify for the self-income support scheme because they've earned too much money. They have money saved up to pay their tax bill, which they could use to keep their business going, but then they're aware that they're going to be causing themselves another problem further down the line in January 2021 when that tax becomes due. So, that potentially is a way that they could look at helping limited company directors by extending those tax bills. But unfortunately for some, the level of overheads that they have to maintain, particularly if they're hiring equipment, paying staff, whether they'll make it to January 2021 is another issue. Now, I'm going to move on here with some other questions from readers which concern other sources of support that you can potentially draw upon. We've talked about loans, we've talked about grants. Now, another type of grant that's available to businesses are another type of grant that's available to small businesses is help via the business rate system. Now, if you are a small business in certain areas, you will be able to get grant assistance, particularly if you are a business that's exempted from business rates. So there have been a couple of questions here. I'm just looking for the best one, and unfortunately it seems to have disappeared from my iPad. Oh, here we go. Small business rate relief. Another thing that shows that businesses are not all in it together is the grants for companies who receive small business rates relief. Now, one FT reader writes, as a result of our all-inclusive rent that we pay in the business centre where we've been tenants of for 10 years, we are paying business rates via our landlords, but we don't qualify for small business rate relief, which is what you need to access this grant funding. Our landlord, she says, does not notify the council of tenants who may qualify for small business rates relief. This means we can't satisfy the criteria for the grant, even though we are entitled to it. There could be a business doing exactly the same activity as my company, but their rent agreement means they pay their own business rates, so they'll be entitled to this help. Andy, another example, unfortunately, of how it's all right for some, but not for others.
Yeah. I mean, that's a great example, isn't it? And I'm sure that they're not alone in that. These grants are there for any business which has a business premises. The thinking behind the grant is you've got this fixed cost as an overhead, which you're going to have to meet, even though your business is going to fall on hard times. Perhaps you have to close the business while this crisis is going on. So let us provide you with a grant to help you meet that cost. Now, that should apply to this business that we've got the example of here, but it's not, because of the way that the rent package it's an all-inclusive rental package where basically you are paying for business rates, but you're just doing it via someone else. It's a bit like having renting a flat where the council tax is included in it. You are paying for that. It's just included in the rent that you pay. I would hope that something could be done around that. The trouble is, it's like all these schemes, they've been set up so fast in response to this crisis that there are people falling through the gaps. And it's incumbent on us, people like IPSE, the Association of Independent Professionals, and the self-employed, to point out where those gaps are and explain that to the government. And we are trying to do that. And that's one that I will take away. And definitely I will mention that to the Treasury and hope that something can be done to treat these schemes so that it captures more people.
Okay, well, thank you, Andy. I've got a final question for you, really good one from FT Reader Cricketer, about large companies delaying payments to small companies. Now, even before the coronavirus crisis happened, this was a major issue of campaign for your organisation, I know. Cricketer says, what is the government doing to put pressure on large companies to pay their small company suppliers? Not being paid for goods supplied pre-lockdown will close many small businesses, especially if they cannot access the government loan scheme fast enough. A really, really big problem.
Yeah, a huge problem. And, we've been taking the opportunity to get the message out there that we can all try and help each other a little bit during this crisis. And if there's a sort of unpaid invoice sitting on your desk and you're a large business, pay your suppliers, get money flowing through the supply chain, because that's going to keep us all going. Now, I might just plug, if you don't mind, Claire, that we're doing a webinar on Thursday at IPSE. We have the Small Business Commissioner in on the webinar. I was about to say coming in, but of course we're all doing it remotely these days. But the Small Business Commissioner, who largely talks about late payment issues, is going to be a sort of guest presenter on our webinar, and we're going to be talking about exactly these problems and what can be done around it, and what what rules are there right now that could be perhaps improved or tweaked to ensure that large businesses are paying their suppliers?
Okay, well, we're happy to plug that for you on Thursday. I'll certainly be tuning in. It sounds very interesting. Just remains for me to say thank you again, and also sorry again for the technical problems that we had with the live Q&A earlier on. We do hope that the issues that we've discussed today have been of use to you. If you want to get in touch with us, you can email me. My email address to reach me and all of the personal finance team is money@ft.com. You can also follow me on Twitter. I am @Claer B, tweeting out all of the stories that FT correspondents are writing about the issues that small businesses and individuals are facing with their finances in the current crisis. And we will be back with another live video next week. I look forward to seeing you all then. And thank you to Andy. Goodbye.